the silver price was to fall back from whatever it is today, 50 and change to 40, it wouldn't derail a precious metals bull market. It would change a whole bunch of people that got the religion of silver in the last 4 weeks and make them doubters. Silver pays so much rent when it moves that you can easily afford to be early and you cannot afford to be late. There's a whole bunch of silver that isn't good delivery COMX or good delivery LBMA silver, but it'll find its way in the system over time. Well, we certainly have a near-term squeeze. You can, given the spreads that the industry has historically enjoyed, you can afford a 3.5% or 4% lease rate. Not a problem. A 35% lease rate? That's catastrophic. And that really ultimately price in the very long term is a function of utility. In the very near term, these high prices might be problematic for traders. In the long term, you have to look at the utility of precious metals for savers relative to the utility of the U.S. 10-year Treasury.
He picked a very interesting gold target. Not quite sure where his math or method came from, but he picked $17,250 by 2030.
What matters in a silver bull market, in my experience, the 3 that I've lived through in my lifetime, is investment demand. The delta between buyers and sellers in the investment market.
That's the end of it? It's that simple?
Yeah, I mean, I've been aware of the arguments around the physical utility of silver for a very long time. I remember when photographic demand went away. And I remember in the middle of photographic demand going away, one of the damnedest spikes I've ever seen in the silver market. It was really difficult for me to explain that away in any other way than observing the fact that in the investment market, there was a lot more buyers than sellers. And I understand the implications of increasing photovoltaic demand. I understand the incredible implications of silver's efficacy as a water treatment item or a anti-germicide. I get all that, and I think it's important. But it would appear to me that what generates real price moves is simply the imbalance between buyers and sellers. Maybe the second thing that makes judging silver pricing as a function of industrial demand difficult is the fact that on the supply side, most silver doesn't come out of silver mines. It comes from recycling or it comes from a byproduct of other metals. So you have this weird thing with silver that when the silver price goes up, it doesn't necessarily stimulate supply. An increasing copper price or zinc price or lead price might stimulate supply, but an increasing silver price doesn't seem to do that. It might encourage more recycling, but it's a very, very odd metal.
Would you say that silver is a monetary metal, or
yes,
would you say it's lost its monetary characteristics?
No, I think it is. It might be a monetary metal in drag, but I note that one of the functions of a monetary metal is that savers believe that they can, if they need to, transact in it, but it is also a store of value. And that's an important aspect of silver, particularly in South Asia, Pakistan, India, Bangladesh, and Sri Lanka, where people have 1,000 years of experience with the debasement of government currency. People, when they can, often choose to store their wealth in precious metals. And for a couple 100 million people in South Asia, the unit cost of gold is too high. They store their wealth in silver. And in that sense, it is a monetary metal. And I happen to know from having been there, but also watching the behavior of South Asians in Dubai, that not only is it a store of value, but it is in fact a unit, an informal unit of exchange, which is the definition of a monetary metal.
One of the things that make gold such a good monetary metal and reserve asset is the very large fixed above ground stock compared to its flow. So basically all the gold ever mined is around in some form or another. It's 216,000 tons. I'd say half is in jewelry and in museums and in teeth. So if we take what's left, it's about 15 trillion of sort of above ground investable gold in some price or another. On the silver side, I think it's one of the great mysteries of the world, how much silver is really above ground. And why that's important as a monetary metal is if you have this above ground stock that people covet and hold, even if it's in the form of jewelry or silverware to some degree, if there's this stable above ground stock of silver versus its flow, that adds to its monetary value. So my question to you, and this is just sort of a fun question, how do you estimate the above ground stock of silver? What do you think we got?
I've been trying for 20 years, Trey, and my track record is unblemished by success. I remember back to the point in time when Buffett was believed to have between 15 and 20% of the world's above ground supply of silver. And of course, normal tightment plus Buffett's cachet caused the silver price to escalate fairly dramatically. And then it got crushed. And I remember the silver bull saying it was another example of manipulation. What it was in fact that the silver price doubled in US dollar terms. The US dollar doubled against the rupiah, and they either had a flood or a bad harvest or something in India. And the Indian peasantry had a choice between selling their silver or watching their kids starve. They made the correct decision, and a bunch of silver supply that nobody knew existed came on the market. And that event caused me to decide that I was never going to be able to decide what the above ground supplies were. And frankly, that I was never going to be able to time a silver bull market particularly correctly. I had to satisfy myself with the fact that silver moved after gold had established the narrative, and that if I was 2 years early, that the price movement in silver made being early not a problem. Silver pays so much rent when it moves that you can easily afford to be early and you cannot afford to be late.
Very interesting. So the media, the financial media, tends to follow what's easiest to follow. So I've read many more articles than I care to admit about the dwindling stocks at the LBMA and COMX. And for a second, throwing aside the Trump tariff influence, which in my opinion has brought a lot of metal from LBMA to COMX, I think that you would agree with me. I'm not putting words in your mouth, but I think looking at those stocks is very short-sighted because would you agree that there's a lot of silver in repositories and, global wealth has a tendency to want to be unnoticed. So there's a lot of silver out there that doesn't want to be discovered. So would you agree? I mean, I'm in the sort of 6 billion ounce camp, or is that roughly where you're at?
I don't try.
Okay.
I'm laughing, Trey, because you and I were at Sprat together as colleagues in the last silver squeeze. And at that point in time, North America was short of silver. And you may recall at Sprat that the Sprat Physical Silver Trust was growing ridiculously. And they cleaned out the silver in Toronto, then they cleaned out the silver in Ottawa, then they cleaned out the silver in Chicago, then they cleaned out the silver in New York, and they had to bring silver from London. Now we have a situation where London's out of silver, and so they got to clean out New York. But the other point you make is that there's a whole bunch of silver that isn't good delivery COMX or good delivery LBMA silver, but it'll find its way in the system over time.
Right.
And by the way, if the silver price was to fall back from whatever it is today, 50 and change to 40, it wouldn't derail a precious metals bull market. It would change a whole bunch of people that got the religion of silver in the last 4 weeks and make them doubters. But that doesn't matter.
Right.
I mean, it'll matter to them if they get whipsawed, but it doesn't matter. The fact that silver went from 40 to 50 is only validation of the thesis for those people who needed validation. And were silver to decline from 50 to 40, that wouldn't matter much either, except for the people who were trading that move on margin. Well, we certainly have a near-term squeeze. You can, given the spreads that the industry has historically enjoyed, you can afford a 3.5, you can afford a 3.5 or 4% lease rate. Not a problem.
Mm-hmm.
A 35% lease rate,
Mm-hmm.
that's catastrophic.
Mm-hmm.
As you know, many of the traders are running 10 or 15% equity to assets.
Mm-hmm.
that that does more than eliminates the margin. I think the lease rates that you quote, 35% for the near month, and 9, 10, 11% further out, talk a lot about the market's belief that, as you had suggested earlier, there is silver out of system that can, over time, come into the system.
Mm-hmm.
Um, I remember conversations that you and I had 2 decades ago, uh, where we both sort of chuckled and said, over time, markets work. The cure for high prices is high prices. The cure for low prices is low prices. And that really ultimately price in the very long term is a function of utility. In the very near term, these high prices might be problematic for traders. That's what the lease rate suggests. In the long term, you have to look at the utility of precious metals for savers relative to the utility of the U.S. 10-year Treasury. that one makes me long-term bullish.
Very good point. Before we turn our attention to investing in silver as individual investors, I had the opportunity to visit with Pierre Lassan a couple of weeks ago, and he picked a very interesting gold target. Not quite sure where his math or method came from, but he picked $17,250 by 2030. And of course, if Lucky Pierre says that, there's a certain amount of truth in it just because he said it. But my question to you is, and I know this isn't your favorite hobby, but how high can silver go?
Oh, God. Um, Silver's emotional.
Mm-hmm.
And the stupidity of small groups of people is basically boundless.
Mm-hmm.
I don't have a number on it, but my experience has been in prior bull markets that from the point in time when silver begins to outpace gold, that its rate of escalation is at least double that of gold. With regards to gold, and I'm sorry about the elliptical way I answer the question, but with regards to gold, I believe that if the purchasing power of the US dollar declines by 75% over 10 years, which I think it will, that the nominal US dollar price of gold will likely mirror the deterioration of the purchasing power of the US dollar. So a 10-year threefold increase in the gold price wouldn't surprise me at all. If past is prologue, the silver price escalation could double the gold price escalation. Will it? I don't know.